Hello, everyone, and thank you for joining us. I hope today finds you safe and healthy. My name is Kimberly Weisul, and I'm an editor-at-large at Inc. I'll be your moderator for today's National Small Business Town Hall, the 8th in a series of weekly town halls designed to help business owners get through the coronavirus crisis. At Inc., we are always looking for ways to support entrepreneurs, and one way we've been doing that is with our ongoing coverage of the stimulus package. I'm so pleased that, again, we're partnering with another champion of small business, the U.S. Chamber of Commerce. I'll be joined by Neil Bradley, the Executive Vice President and Chief Policy Officer at the Chamber. After my conversation with Neil, we'll be taking your questions, and I'll be introducing a panel of experts to help answer them. As you may know, we generally get hundreds or even thousands of questions at these events, but we do have a moderator working behind the scenes to make sure the questions with the most likes get to the top of the queue. So even if we're not able to answer your particular question, we hope that we will answer a similar one that will be helpful to you. For those of you who are not familiar with Neil Bradley, he has more than 2 decades of experience working directly with high-level policymakers. At the Chamber, as the Executive Vice President and Chief Policy Officer, he is responsible for aligning the Chamber's overall policy priorities and advocacy efforts. Welcome, Neil.
Hi, Kimberly. Good to be with you again.
Nice to be chatting with you. And as you know, and as our audience knows, at these town halls, we always like to start with the news. And today that means the bill working its way through the House of Representatives. Parts of this bill do concern the Paycheck Protection Program. So before we jump in, for those who haven't joined us before, can you please just give a really quick description of how that program and those loans work?
Sure. The Paycheck Protection Program is a loan targeted to small businesses, the self-employed and independent contractors. It's generally for those with fewer than 500 employees. It's based off your payroll costs. You can borrow up to 2.5 months of payroll. And the unique feature about these loans is that they can be forgiven. If a small business or someone who's self-employed or a nonprofit uses those loan proceeds to pay for wages for their employees, rent, utilities, interest on debt, they can have their 100% of their loan forgiven.
Now, they have to make those payments within an 8-week period, right? And that has been a point of some frustration for business owners. So why is that potentially a problem, and how would the House bill aim to change this?
Kimberly, that's exactly right. Under the law as it stands today, there's an 8-week period in which you have to maximize your spending for loan forgiveness. Basically, it's 8 weeks where you spend the proceeds of your loan on wages, rent, utilities, the things I just mentioned, to qualify for that loan forgiveness. And that 8 weeks begins immediately after your loan is originated and dispersed to you. Obviously, what many small businesses have discovered is they've received the loan and they're still shut down. They're in a stay-at-home order, for example, restrictions on their business. So in order to qualify for loan forgiveness, they're actually having to pay employees when the employees can't actually work. Now, that's the law as it stands today. The bill being considered by the House of Representatives right now at this very moment actually changes that, and it would do a couple things. One, it would expand that 8-week period to be 24 weeks. So you would have 24 weeks in which to maximize your loan forgiveness under this proposed legislation.
So that 24 weeks would be a huge amount of time, right? Because some of the numbers that have been tossed around are, maybe it could go to 12 weeks, maybe it could go to 16 weeks. So what do you think are the chances that the Senate will agree to this?
Well, the Senate's definitely not going to agree to this overall package. There's a big fight right now going on between Republicans and Democrats, between the House and the Senate, about what this Phase 4 package will ultimately look like. I think there is likely to be some changes. There will be some changes to the PPP program and the loan forgiveness. I don't know if it'll go all the way to 24 weeks, but there's a good chance that at least some of the parameters around loan forgiveness will be changed. I think one of the ones that's almost certain to be changed is the requirement that 75% of your expenses that go towards loan forgiveness be tied to payroll. There's bipartisan agreement on Capitol Hill that rule imposed by Treasury is a bad rule, and that's likely to get repealed.
Okay, so I think for a lot of business owners, that would be huge to have that 75% go away. Would it just vanish and you could spend the money on any of those sort of approved categories, or would it be replaced by a new metric? What do you think might happen?
No, I think it's likely to be the same qualifying expenses that exist in current law. That's the payroll expenses, rent, utilities, interest on debt. I don't think that's likely to change much. It's just this requirement that a certain portion of it, a supermajority of it, be for payroll is likely to go away.
Interesting. Thank you. Another thing that the bill would attempt to do would be to extend the Paycheck Protection Program through the end of the year. I find that really interesting because we didn't think there was going to be enough money in it to get to the end of the month. So what does that mean? There might be more money on the way? Do you think that will happen? What do you know about that?
Yeah, the House bill does extend the program through the end of the year. It does not provide additional money for the program. I think we're all watching to see how long the current tranche of money. Remember, there was $349 billion initially provided. That went within 2 weeks. Then Congress provided an additional $310 billion. We expected that to go quickly. It's still there. There's still billions of dollars left to be lent under the program, and no one's really sure how long it'll last. So I think we're going to take a step back, figure that out. Congress will probably make a decision about whether there needs to be an additional replenishment, over the next couple of weeks.
Yeah. And why do you think that there is still money left?
Yeah, so one of the interesting things has been average loan size. So if you go back to that first tranche, the average loan size was well over $200,000. In this second tranche, so far the average loan size is about $73,000, but it's actually falling quickly. We did some calculations based on the data that's been released by the SBA. And for example, last week, the average loan size was just under $37,000. What this indicates to us, and based off our conversations with lenders who are participating in the program, is at the moment the people most utilizing it are really the self-employed and independent contractors, and maybe a small business that has maybe one W-2 employee. So at $37,000 as an average loan size, for example, you can make a whole lot of loans before you come close to $1 billion.
Right. Okay. So then I know this sounds like a crazy question and one we would not even have thought to ask a couple of weeks ago. But if you think that this loan could be helpful to you, you haven't applied for it yet, should you try to time this with your reopening? I mean, I know it sounds insane, but if there's going to be money available, it might be something to try.
You could. Again, we don't know how quickly it's going to run out. We were wrong on the front end about how quickly the first tranche would go. It went more quickly than any of us thought. We all then learned from that and thought the second tranche would go very quickly. It hasn't. So, the program could run out. It could be next week. It could be the following week. It all depends on what borrowers are doing. If there's a flood of businesses, with say 100 employees who begin making loan applications next week, that money's going to go quickly. I think the thing to think about if you're thinking about trying to stage this with reopening is how close is your business, is your area to reopening right now. You may be in a situation in which you're likely to have reopening fall in what is current law, that 8-week forgiveness, maximized forgiveness window. And so it might make sense just to go ahead if this is something that you think is beneficial to you.
Excellent. Thank you. Another thing that the bill would do would be to expand eligibility. More types of organizations would be able to get these loans. Who's going to be roped in now?
Yeah, so under existing law, it's generally small employers and nonprofits who are registered under the tax code as 501c3s. There's all types of other nonprofit organizations, C4s, C6s, C7s, for example. Those are now included. They've also expanded the program to include critical care hospitals who might not have otherwise met the eligibility requirements. And then there's a whole expansion for local news operations. Think about your local mid-size or small town newspaper. They're granted a kind of a special exception to allow them to access the program as well under the pending House bill.
So another way that business owners could sort of help with their cash flow during this time is the tax credit for retaining employees. That's another thing that could change. What do you expect there?
Yeah, two things to be aware of. First, we've been advising folks for the past, I guess, 8 weeks now that remember if you take a Paycheck Protection Program loan, you can't also get the employee retention tax credit. Under the House bill, they would change that. And that's another thing that I think is quite likely to happen. I don't think that it's going to be a going forward when the new law is enacted. I think you'll be able to access both programs. The new proposed legislation also greatly expands the employee retention tax credit. It makes it easier for more businesses to claim. It also dramatically increases the size of the credit. And importantly, it applies an additional credit on top of what a business pays for wages for the fixed costs associated with employment. So we all know if you don't have employees, you also have overhead, for example, and being able to also claim a credit, not just for the wages that you pay employees, but some of those fixed overhead costs is a feature that's in the House proposed bill. I think this is going to be the subject of a lot of negotiations between the House and the Senate. I'm very bullish on the fact that there's going to be an expansion at the end of the day in the employee retention tax credit. We're just going to have to see how big that expansion is.
Okay, excellent. So that's something that every business owner should be looking at, regardless of if they've received one of these loans, it sounds like.
Yes, I mean, I think it's a good, if you're talking to your CPA or your tax advisor, it's a good thing just to make note of this with them and let them know that if you haven't taken advantage of it already, maybe because you took a PPP loan or you didn't think it worked for you, to make sure that they're watching what Congress is going to do and come back to you once a legislation is enacted so you can immediately figure out how to take advantage of that tax credit.
So we've been talking about the bill that's in the House. Obviously, it's going to go to the Senate. What are things that you think the Senate might try to add that they want that the House has not included?
Well, the Senate's very focused on a safe harbor for employers against litigation. So, one of the common fears that we hear from businesses across all sectors, frankly, of all sizes, is that, there's inherently some risk in reopening, that they're going to reopen, that they're going to do all the things that the public health officials recommend that they do, the social distancing, for example, the sanitization of cleaning surfaces in the business. And then, God forbid someone contracts COVID-19 and then they sue the employer saying, well, I caught it in your place of business. You should have been doing more. And one of the policies that the Senate is very interested in including is one that tells businesses that if you're generally trying to follow the public health guidelines, you have a safe harbor against being sued and having called into question your efforts in terms of protecting the public health in that way.
Might the Senate do anything on hiring and making it easier for or less expensive for small businesses to hire as they come through this?
Yeah, there's growing interest. For a minute ago, we talked about the employee retention tax credit that's focused on retaining employees. There's growing interest about an employer hiring tax credit. So knowing that, sadly, 20.5 million Americans were unemployed last month, some of them will not be going back to the jobs they previously had. We need new jobs created for those individuals. So providing a tax credit for employers when they bring someone new onto the payroll is something that has a lot of interest. And I think there's a decent chance that gets included in the final legislation.
So another part of this that's important to business owners is what's available in terms of unemployment, right? Because that's something that they weigh. Should I get a PPP to pay my employees or should I put them on unemployment? And it looks like there'll be some changes to unemployment assistance as well, right? If the House has its way.
If the House has its way, that's right. So the House bill includes both an extension in terms of the number of weeks of unemployment. That's pretty typical in a recession. You could see something like that occurring so that in addition to the normal 26 weeks, there's additional weeks provided, perhaps up to 39. That's pretty standard. The controversial element is the extension of the $600 weekly additional federal payments. So the CARES Act included a provision that says on top of whatever your regular state unemployment benefit is, the federal government will provide an additional $600 per week. When this was discovered and members of Congress realized it at the last minute, it actually almost derailed passage of the CARES Act. I think it's highly unlikely that Congress comes to an agreement that simply extends that $600 per week, but it's going to be a subject of protracted negotiations, particularly between Republicans and Democrats.
Thank you. So for those who do have PPP loans, for many, they're turning their attention to how do I get this forgiven? We were supposed to see more details on that, if I'm counting right, by April 26th. We don't have it unless it came in the past 20 minutes, which could certainly happen. What's going on here? When do you think we're going to get some more guidance?
It is incredibly frustrating. And I know as soon as it comes, we're all going to know it because our phones are going to be buzzing because we're all waiting so anxiously to see it. They have been, Treasury and SBA have been focused on other elements. For example, some of the guidance they most recently put out has to do with concerns about being audited and safe harbors, about whether or not you can truthfully attest to whether you need the loan or not. And they just haven't quite turned to finalizing the rules around loan forgiveness. So that means at this moment, if you have a PPP loan, you really have to go off of the law as it stands today and make some determinations about the best way to maximize your loan forgiveness based on the law as it's written today and the very limited guidance that we have so far out of the Treasury Department.
So let's talk about that safe harbor that you mentioned, because that came out just this week for people who are thinking maybe I should give the loan back, maybe I'm going to get investigated. What did SBA and Treasury tell us this week?
Well, they basically created a bright line, and they said that if you're a small business who's taken a loan of less than $2 million, so the principal amount of the loan that you took out is less than $2 million, they are not going to investigate your attestation that economic circumstances necessitated the need for the loan. So whatever you filled out when you checked that box in submitting your loan application, they're not going to come back after the fact and question you on that. If you took out a loan that's more than $2 million, they've already announced that they're going to review all of those loans. And one aspect of that is the determination that, in fact, that you needed the funds, that economic circumstances necessitated you applying for and taking out the loan.
Got it. Another thing we're still waiting for is sort of an official start date for the Main Street Lending Program. That's for companies for whom it makes sense to get a loan of at least $500,000. So while the banks get ready for that, what should business owners be doing to find out if they can get one of these loans and if it makes sense for them?
So the first thing to do is figure out if you're eligible. At the U.S. Chamber, we've created a guide for the Main Street Lending Program. And step one is, here's who's eligible. So look through that, figure out if you're eligible for it. Then look at the terms of the loans that are available. The minimum size loan is $500,000. So if you don't think you would qualify for, or you don't think you would want to borrow at least $500,000, the program's not for you. But if you envision borrowing $500,000 or even more to support your business, you ought to take a look at that, understand the terms. It's a 4-year loan. The interest rates, basically LIBOR plus 300 basis points. Figure out what those terms are, and then go talk to your lender. Like the PPP program, this is a loan that is made through private financial institutions. So pick up the phone, call your bank, ask them, do you anticipate participating in the Main Street Lending Program? If so, you're going to want to sit down with them and kind of begin that loan process. It will look, in terms of applying for the loan, a lot like any normal lending. The bank is going to do due diligence. They're going to determine your what they believe is your ability to repay. So it's not going to be as quick, as seamless, or as easy as the PPP, but obviously it's an opportunity to get additional funds, or in some cases, much larger funds than were available under the PPP program.
So what is going on now with the EIDL program, the economic injury disaster loans? There was some more money for those in the last legislation, but they don't seem to be open for most companies right now.
That's exactly right. So when the EIDL program initially shut down because it had run out of money, and this is the program that's run by the SBA, not through the bank, so you apply online at sba.gov. It turns out that they had a huge backlog of applications that they had already registered, that they did not have sufficient funds to make those loans. So what they've begun doing is processing that initial backlog. They still think they're going to run out of money, so they've started capping the loans, which are supposed to be for up to $2 million. They're capping them at $150,000. And they are not taking any new applications with the exception of applications from farm and agricultural small businesses. So there were, like a lot of things, probably some political considerations here. There was a view that many farm and agricultural small businesses didn't have an opportunity to get in the first round, and they've opened a limited window for them to apply today.
Got it. Thank you. We are seeing a large number of states starting to loosen restrictions on businesses. So on the one hand, you've got the legal and health concerns, and on the other hand, you've got customer demand. How can you tell before you spend the money to open up again that customers are ready for you? No one wants to have a reopening and have nobody come.
Yeah, so this is one of the things we've been looking at the U.S. Chamber, and it won't surprise you to learn that there are different views amongst the American populace and amongst consumers. There is a core group of people that polls and focus groups regularly tell us that if it opens tomorrow, they're going to be there tomorrow. They are ready to get back. They're ready to be in your store. They're ready to go see a movie in your theater. They're ready to come to your bar. Whatever it is, they're ready to do it. There's another segment, you can call it, 10%, maybe 15%, who regularly say, I'm not venturing back out. I'm not doing those things until there are therapeutics or vaccines available. So they're not likely to return. And then there's the vast middle. And what the vast middle tell us is they want some indication that it's safe. If they're going to come to your store, if they're going to come to your restaurant, they want to have some indication that you're taking precautions to protect their health. That's why communications to your customers is so incredibly important. They want to hear from you, not just that you're open, but what you're going to be doing. How regularly are you cleaning? Are you checking the health status of the employees who come back? Are you making sure that employees who might be sick or might have been exposed are staying at home? They want to know all the things that you're doing to protect them. The more they hear about that, the more comfortable they tell us they're going to be in returning to your store, your restaurant, or whatever that place of business is.
Thank you so much, Neil. We really appreciate your insight and your advice and your knowledge for business owners here. We are going to turn to our audience questions next, of which there are many. So I'm very pleased to introduce our panel. First, I would like to welcome Bridget Weston. She has been a panelist with us before. She is the acting CEO of the SCORE Association. Welcome, Bridget.
Glad to be here.
So Bridget, what are you telling business owners who have a PPP loan and are now realizing that it will run out before they're likely to reopen, and they're concerned about paying their employees to potentially not be productive? What advice do you have for them?
It's a concern we are hearing with our SCORE mentors who are talking to small businesses as well. And Neil covered a lot of great information. One of the things we are talking about is to remember that as of today, 75% does need to go to that payroll, but the 25% can go to those other costs. So to make sure that you are utilizing that effectively. The other is maybe there are ways that you can engage your employees to plan for reopening so that, you might not be able to open your doors next weekend, but you can keep your employees engaged, keep them engaging with your customers, whether it's education online or making new content for them to share out to your customers. It is also easier to ramp up if you do keep employees on payroll so that when you do prepare to reopen, your employees are ready to go as opposed to having to start the search over and retrain. So there are a lot of benefits to utilizing the PPP if you do have it, even if you aren't ready to open right away. However, unemployment is something that businesses are considering depending on which type of business and when they are ready to reopen. So those are things that we encourage the businesses to talk to either a SCORE mentor or another expert to see which is best for your business.
Excellent. Thank you so much, Bridget. Right now, I'd like to introduce Manny Cosme. He is the president and CEO of CFO Services Group. Hello, Manny.
Hey there.
Hey.
Good to be back.
Thank you. It's great to have you with us. So to qualify for forgiveness, business owners are going to have to show that they use their PPP money for certain types of expenses and not others. There's a lot of guidelines and intricacies around this. What is the best way for them to track all of this?
So here what we've done is we've created a giant spreadsheet, basically like a matrix of like, here's all the criteria that you need to meet in order to make sure you get the forgiveness, right? So remember, it's really around 3 criteria as we talked about. It's time. So at least as of today, you have to spend all that money within the 8-week period of time. So really tracking when you get the funds and then literally marking on your calendar when that 8 weeks ends. That's very important. The second thing is around, of course, the spending, making sure you're spending that on the right things. And hopefully you use an accounting system like QuickBooks to account for all that. And, what we're recommending is actually maybe even opening up a second bank account to park that PPP money into, so that when you spend the money, you actually make a physical transfer from that PPP account to your main operating account. That's a really quick and simple way to track that money. And then, of course, the third is around employee headcount and just really being on top of that. Check your payroll records, make sure you know what that full-time equivalent count was so that you can meet that criteria. So what we've done is created a spreadsheet to kind of track all these things, and I do recommend that business owners do the same.
Great, thank you very much. Next joining us is Susan Gross-Sholinsky. She is a member of the law firm Epstein, Becker, Green. We had some technical difficulties earlier today, so she's with us on audio. Hello, Susan.
Hi there.
So our question for you is, if a business owner does not use 75% of their PPP loan for payroll, but they use it for other legitimate business purposes, not including the categories that Neil laid out, what happens? Is it just that the loan doesn't get forgiven, or could it potentially be considered fraud?
Yeah, I mean, to me, I kind of see this as 2 questions, right? So, what if I don't spend the 75% on payroll, right? Am I still eligible for forgiveness at all? And to me, this is still an open question. It's not clear to me whether the 75% threshold is a cliff. And if you don't spend the 75, you're not eligible, for forgiveness at all, or perhaps, you're just not eligible for full forgiveness. Maybe you'll be eligible for, a prorated amount. But then you sort of get to that second question, which is, will this potentially lead to a fraud charge, even if the proceeds are used for legitimate business purposes? And I can't really see how that's going to happen. That just kind of seems inconsistent, even with the certification that's part of the application, where people are saying that I understand that if the funds are knowingly used for unauthorized purposes, that the federal government could hold me legally liable, such as, fraud charges. So, I don't think there's much of a chance of that.
Excellent. Thank you so much. And I'd like to welcome Marilyn Landis, who also has been with us before. She's the president and CEO of Basic Business Concepts. Hi, Marilyn. Have we got Marilyn?
Hey, you've got me.
Okay, great.
All is good.
All right, awesome. So as we mentioned before, many states are starting to reopen, but many business owners are short on cash, whether they have a loan or not. How do you decide where to spend the money that you do have?
Good question, because you've got the money sitting in the bank account. And as Bridget had just talked about and Susan had talked about, you're trying to decide how to spend it, what's the best way to spend it. First, I would recommend know where you are. You're probably feeling like you have to jump the high hurdle and not having a chance to get a running start. You're at a dead stop. So first assess where you are and what resources you have. You've got some cash in the bank from PP, perhaps, or some other cash from maybe an economic development agency you got it from. What non-cash resources do you have around you? Perhaps talented family members who are willing to work for love and affection versus payroll. So assess what you have around you. Second, keep in mind, Gretzky's very famous for saying you don't skate to where the puck is, you skate to where it's going to be. So determine in this new world who your customers are now. Neil had talked about those who may come back or only come back if it's safe. Know where your customers are, where you're going to find them. What staff do you need and the cash you need to execute this plan to reach these new customers and get them to buy from you, whether you're a Main Street business or you're a consulting company or a construction company. If you pivoted your company, what your profit margins going to look like with that new market that you're going after? Remember, cash follows profit eventually. The inverse is also true. So if you need cash, you need to aim for profitability. So determine where you are, determine where your customers are and where you have to skate to. Third, look at what obstacles are in your way. Do you need cash? Perhaps it's a Main Street loan or something else. Or do you need just plain old ingenuity or both to overcome those obstacles? Then, and only then, by answering these questions, you've defined what your cash need is, and you've prioritized the order in which you want to pay that cash out.
And thank you very much. Our first question from our audience. Thank you everyone for writing in your questions. You can continue to do that in the Q&A window if you'd like, and I'll see the ones that get the most likes mostly. I think this one will start with Neil. It's about the EIDL, so congratulations to whoever managed to get one of these. It says, can the EIDL be used for any reason, such as paying old debt, and what part of this loan is forgivable? So Neil, can you help our audience member with that?
Sure. The EIDL loan, the loan itself is not forgivable at all. It operates like a traditional loan. There was a small grant component added as part of the CARES Act. It's generally $1,000 per employee up to $10,000. That's a grant. It's not a loan. And as a grant, that does not have to be repaid. But the loan itself, when you sign that loan agreement, which you will do with the SBA if you've received an EIDL loan, operates like a loan and it's got to be repaid. In terms of uses, it's a working capital loan. And so you should not think of it in the same way that you think of PPP with those same types of restrictions. It operates like a traditional working capital loan.
Excellent, thank you. This next question I think is for Susan. It says, we have a manager who is not able to return to the office immediately. If we temporarily promote someone and give them an increase, will their new rate be approved for PPP forgiveness, or can we only claim the old rate of pay? So can they give this person a raise and have it count for forgiveness, Susan?
Yeah, I mean, I think if it's as long as it's under the 100,000 mark, anything that goes from 100 to over 100 is not going to count. But I think any raise that's legitimate would be.
Okay, excellent. This is a question about payroll that we've had very frequently. I'm thinking maybe Marilyn or Manny, this one might be for you. So maybe we'll start with Marilyn. Basically, what's happened here is that they got their PPP loan on the 12th. And the payroll period ended on the 8th. The payroll then gets deposited on the 13th, if you can keep track of that. So can the payroll be included in the forgiveness portion of the loan, or will the next payroll be the first one to be forgiven? So essentially their payroll got, the day that they tried to pay payroll and when it landed in their employees' accounts, they got their loan in between. What does this mean?
Well, and I've been fielding this question a lot from a lot of customers. It's a legitimate question. There's no clear guidance on this that's come out from the SBA, but the intelligent way to look at it, I believe, is you're asked to pay for 8 weeks of payroll. When you actually pay, that may fall, depending, some people pay a week behind or 2 days behind or 3. What you want to look at in Manny's suggestion of ticking it right off the calendar, here are the 8 weeks at which I have to pay. And this was the payroll prorated for those 8 weeks. It may have not fallen within that on the pay period, but those are the 8 weeks that I have to pay.
Got it. Thank you. Manny, I'm going to ask you a related but slightly different question. This says, to calculate the 75% of the PPP used for payroll in the 8 weeks after the funds are received, do we need to adjust total payroll to reduce for any salaries in excess of $100,000, right? So there's that $100,000 cap. How do you treat that when you're paying folks?
Yeah, so you can only pay $8,333 per month per employee. That's the way you kind of think about that cap here. And by the way, to the prior question, I do absolutely agree that you just want to make sure it's 8 weeks worth of payroll. The AICPA actually has been trying to weigh in on that question on whether we use, for accounting purposes, to throw accounting jargon out there, the accrual versus cash basis of accounting, and there really is no definitive answer on that. So as Marilyn suggested, that's exactly what we're suggesting, is just make sure it's 8 weeks worth of payroll. But to the cap, 8,333 is your cap for salaries.
Excellent. Thank you very much. Another one, maybe Manny, for you about payroll taxes, right? This has been a sticking point. You get the money to pay your payroll, but you still have the employer part of payroll taxes. Is the employer portion allowed to be paid through the PPP loan? Can you use the loan to pay those taxes?
Yeah, so state and local taxes, the employer portions can be used, can be part of the forgiveness. Federal unemployment taxes, so you're talking about your FICA taxes basically in FUTA, that cannot be used as part of the forgiveness. And I will say, by the way, for those of you who run, you maybe run your own payroll, most payroll systems now thankfully have a report called the PPP loan forgiveness report that you can pull out of the system. So you don't have to think about all this and wait, do I have to count this or can I count this? The report should absolutely tell you, and hopefully whoever does your payroll system is keeping those reports updated with the latest guidance. So thankfully we have that now.
Excellent. We'll take anything we can get here, right?
Yeah.
This next question I'd like to ask to Marilyn. If you are halfway into the PPP funds and doing what we all think is the right documentation and using the right formula, and then the program gets extended past 8 weeks, how do you see us adjusting? It feels like companies getting approved weeks ago could actually be penalized. What do you do here?
You're absolutely right. And when we have, because we've had this rolling issue of guidance that's often retrospective or going back, retroactive, we've had a number of concerns with that. So if that were to happen, we would expect guidance from the SBA on what to do with it. I would think you may be able to adjust your payroll. If you called all of your employees back in order to pay them for 8 weeks and you really didn't need all of them, it would be nice to think you could adjust the amount of payroll you need and spread it out over the period you need it. Because after all, the intention of this law was to help small business and help their employees. We don't know yet. We just don't know.
Okay, there's a lot we don't know, and we're all waiting on more guidance. So thank you. This is, I think, a question for Susan. This person has an employee who is concerned about returning to work. They have a PPP loan. If he returns and then decides to leave, do we have to replace him to get our PPP forgiveness?
So, yeah, I mean, I think to the extent that somebody, decides not to come back, I think you're not going to be, penalized, and it's not going to be like you're paying less. To the extent you want to bring somebody back, instead of that person to get that part of the credit, I think you can go ahead and do that. But I think you're not going to get penalized to the extent that somebody chooses not to come back.
Okay, excellent. And we have another question about employees who are not wanting to return to work. It says, I have a PPP loan, but 85% of my employees don't want to return to work because COVID-19 cases are increasing in South Texas, which is, I guess, where they were. I might open with limited hours, but do I still pay employees who do not want to work? Neil, can you start on this one? Their employees don't want to come back.
Yeah, so this is, to Marilyn's point about evolving guidance, this is one where we have the guidance kind of halfway done. So one of the guidance question and answers we got out of Treasury was this question of an employee who declines an offer to return to work. And what they've said is that if the employer makes a written offer, it's really important that it be a written offer to bring that employee back, and that they can document that the employee declines to come back, then they're not going to be penalized in terms of the employee headcount issue. Remember, that's the second part of where your loan forgiveness can be reduced, as if you've reduced your number of FTEs. What's not clear is what happens with respect to that 8 weeks of payroll. You still have to first maximize the amount of money that you're spending on payroll, rent, utilities, 75% under current guidelines right now for payroll in order to qualify for loan forgiveness. So what's not clear is how this might impact those payroll portions. So to your specific example, 85% not returning for work, it's going to be really hard under the current rules to maximize your loan forgiveness if those folks aren't coming back and if you are not paying them for the 8 weeks after the loan origination.
Thank you. Marilyn, you had some advice for this business owner as well, whose employees don't want to come back?
I do, just on a practical side. They may be, are they afraid to come back to your location? Is there other work they could do for you that perhaps they could work from a location where they feel safe? And many of the clients I have talked to have been looking at what's the safest location for their clients, their employees to work. The other piece is we've had 3 or 4 questions in a row. What if the rules change? And this is a good case. They're making decisions about that 85% that won't return based on the rules as they are today. What happens if the new bill passes and that changes and they've made those decisions? What I've been telling my clients is because we are in a state of flux with this rules, you document every decision you make. You put all the appropriate, write down your argument you made at the time, what was going on in your head, put it in, whether it's an electronic file, a paper file, make it documented so that if the rules change retroactive and you're impacted by that change, you can make a case for an exception. Whether you go to the SBA, you go to the Ombudsman's office, wherever you go and say, look, and I've been fielding a lot of calls as a rep of the Ombudsman's office from somebody who said, I made this decision based on the regs when they came out on April 3rd, and now something has come out on May 1st and it's changing, and I'm caught in the middle between the two. And those are cases that they can take to the SBA if they've documented it, or to the Ombudsman when they're getting non-response answers from the various agencies they're caught between, maybe Department of Labor and SBA. But if you have a documented case, you have a hope of surviving any conflicting regulatory changes.
Excellent, thank you. This one I think is for Manny about health insurance premiums, and does that count? It says the guidance on forgiveness when it comes to health insurance premiums paid by the company for owners is unclear. This person is one of 2 company owners, but they are on payroll and paid as an employee. So does the money paid to their health insurance count for purposes of the PPP?
Yeah, that's a dicey one. It is, I think, a little unclear. So the way that we're interpreting that is that if it's done under a group plan, then yes, the portion that the employer, so the way it's written is that the portion that the employer kicks into the health plan for the employees does count as part of your payroll. So we're just kind of extending that to owners as well. So if you kind of think about the amount of money that goes into your health plan, there is a portion that is the employee, quote unquote, portion, and then the employer portion. And in some states, you can have a group of 1, or 2. So if you're in that kind of a state, then you can have an insurance plan. You can have a group plan then, and that's the way we would interpret that.
Great, thank you. Yes, Marilyn.
Where some confusion comes in, and for those self-employed who are looking at their Schedule C, self-employed have never been able to deduct their health premiums for tax reasons. And actually they pay a higher cost for their health premium because they cannot use it as a tax deduction. So when they don't see it on their Schedule C and they say, why can't I include that when others can? And that's just part of the tax code, and the guidance we have so far is that they have to work off those expenses that were listed on their Schedule C. So that's where some of the confusion comes in.
Got it. Okay, thank you very much. This is someone who has kept all of their employees working at their full pay throughout COVID, but they're still not meeting 75% for the payroll requirements. So Susan, maybe how can this happen, and does this mean that they're not going to be able to get forgiveness because their payroll is not meeting 75%?
Yeah, I think some people have sort of signed up and taken the loan, based on a period when they may have had more employees, and then they, furloughed some employees, so they sort of estimated, or maybe they terminated some employees, so they misestimated, the amount that they should have taken on the loan, which again is perhaps one of the reasons that the government's sort of thinking about changing this 75% sort of arbitrary number.
So does this mean that this person, even though they've kept everyone employed, if maybe the hours have gone down, as it stands now, they're not going to be eligible for forgiveness? Is that correct?
Right. So again, I mean, if it's deemed a cliff, yes, but perhaps to the extent that it's deemed a pro rata number, an aspirational number, the 75%, then they wouldn't be eligible. But to the extent that it's a proportion, perhaps they'll just be eligible for less forgiveness.
Excellent. Thank you, Marilyn.
I have some clients that are in that situation. One was actually the way the bank calculated, because we were all told to go for the maximum amount they could get. But I have a couple of clients that have actually found new markets in this time and have a need to bring people on for those new markets that are in addition to, for example, one who has a new market in telemedicine. So what they've used that extra payroll, because the intent is to keep people employed. So they're hiring people and they're bringing people on, and they will meet their 75% requirement. A lot of it being based on the new employees that they need because they're in a new market and need people with those skills.
Excellent, thank you. I have a question for Bridget about protocol for people who are trying to reopen, and then maybe Neil, you could take it as well. What is a recommended protocol when if we reopen the restaurant and an employee tests positive? Do we shut down for 14 days to quarantine everybody and alert guests who were present that day? What are business owners going to do if they have an employee who tests positive?
It's a great question, and we do recommend that all of the businesses who are getting ready to reopen or in the process of reopening to have a disaster plan like that to address that. And there are some very specific CDC guidelines that can help to say what to do. So first, making sure that you're following those and following all of the disinfectant procedures that the CDC laid out. And I do believe that part of it is to communicate to anyone who has come into contact in those past 14 days. So making sure that you are ready to do that, whether it is a list of list of people who came into your location or anyone who, an email list or phone number, something like that, that would be a best practice that we would recommend.
Excellent. Neil, could you elaborate on that? Anything about best practices if an employee does test positive?
Yeah, let's begin with the first step you want to go to, in addition to the CDC guidance, is what are the guidelines in your state? And they vary dramatically from state to state. So some states, for example, in the example we were just talking about, some states require you to keep basically a log of the customers who are coming into your restaurant so that you can be able to do that tracing. In other states, that's not required. Some states have very strict protocols about contact tracing and what you're supposed to do in quarantining individuals who may have been in contact. You're going to want to follow those. Sadly, it varies from state to state, so you're going to have to check that out as well. But you want to think about it from a logical standpoint. You immediately want to protect the health of the person who has contracted COVID-19. Then you want to figure out how you isolate them, and so doing it so that they don't infect anyone else. Then individuals that they were in contact with, that's your next ring. And you definitely want to make sure that immediately after that, you're doing all the disinfectant that you should be doing. And that might require some temporary closure for you to do that deep cleaning.
Excellent, thank you. Another category of expenses that we haven't spoken about so far are expenses that companies incur to keep people operating if they haven't been working from home before. So Marilyn, can those expenses be covered in the PPP program, those expenses related to getting people set up to work remotely? And if not, is there another source of funding to cover these costs? And they've taken a PPP, so they're wondering, are they still be able to take tax credits for those expenses? Gets complicated fast. What advice can you offer?
It does. And there's a question, it's a very good question. A lot of people are asking it because it was very expensive to move them home. And in some cases, it's going to be expensive to move them back. We said nothing of what it's going to cost them for the deep cleaning that Neil was talking about, and all the PPE and all the tracking and all the new things they have to do. So many companies are saying, can I use that money? If they had gotten an EIDL loan, it said working capital, that could be some money to go toward that. But most of the companies are going to have to figure out where the cash is going to come from. The banks are starting to advertise that they're lending again. That's going to be an interesting experience for both the banks and the borrowers, because you're not going to, banks typically don't lend when you've had a crisis in cash flow. So a lot more is going to lean on projection lending, which banks have not done in decades. So it's going to be, don't think it's going to be easy, even though they're going to welcome you with open arms. The other piece is they traditionally have been lending against real estate, and that's, everybody's beginning to feel that could be the next crisis or the next issue. So there's a lot of expense. You're absolutely right, Kimberly. The question is dead on. A lot of expense that these businesses are going to be incurring. That's why I suggest first you look at what your expenses are and where can you best get that money to meet those. It might be an economic development group or a state grant that you may be able to get the money you need to pay for some of those costs.
Excellent. Thank you very much. This question comes from Melissa. I think it's a question for Susan. She says, I overestimated my monthly payroll and received PPP funds in excess of my total 8-week payroll amount. Can I keep the excess loan amount and pay the interest?
I mean, you can certainly keep extra and, and just not be forgiven for it. But again, that's assuming you don't sort of miss the 75% threshold.
So if she's going to miss it, does that mean she'll miss it entirely?
Well, again, that's the big mystery for me. I mean, some people think that it's 75% is a cliff, but to me, it's not clear. Is that just could it be pro rata to the extent that you spend less?
Got it. Excellent. And yes, Marilyn, before we go to the next question.
We've talked a lot about the 75%, and I know the Democratic House is looking and making changes to that. Keep in mind that 75% was never in the law. So it could be changed under an agency change of rules and not have to be a law. And a lot will depend on pressure that may grow from small businesses if the rule, because the Office of the Inspector General actually criticized the SBA because the rule is more restrictive than what the law has set forth. So there could be changes without having to wait for the law if there's enough pressure, I think.
Excellent. Thank you very much. Bridget, another question for you. This person is talking about taking employee temperatures at work. Isn't the person who does that going to be exposed? How should people be thinking about this?
It's another great question, and I really appreciate what Neil pointed out about following your state or local guidelines as well. What we have been looking at is to make sure you are keeping everyone safe, including yourself. And so if it is about taking the temperature, perhaps it is the employee that is taking their temperature and then, acknowledging that it was self-reported to the employer about what their temperature is. That would be a possible solution to that. But again, making sure that regardless you are following state guidelines, but keeping yourself safe. Safety is the most important thing right now.
Excellent. Thank you very much. Manny, this is a question for you, I believe, about part-time employees. This is a small company that provides therapy in homes and schools for children with autism. They did get a PPP loan. Before the time that they got it, some employees were going 10 hours a week and others were working 25 hours a week. Do they pay them the number of hours they typically worked before the shutdown? Or do they pay them full-time hours so they can maximize their loan forgiveness? What's the smart thing to do here, Manny? With part-time?
Yeah, great question. And so we're going to jump back to that 75% threshold that everyone's talking about. The rules don't say that you can't pay someone more than what they were earning before this happened, right? It's just you have to spend at least 75% on payroll. You have to cap it at 100,000 per employee. And more importantly, in this situation, you have to keep the same full-time equivalent count. So if I guess you sort of took a part-time person and essentially what it sounds like you're doing is increasing them to full-time, well, then you are definitely probably going to meet that full-time equivalent count. So you get a check mark there. And you're going to spend at least 75% of the money on payroll. So you get a check mark there. So as long as you've checked all the boxes, everything's fair game at this point.
Susan, what would you recommend for employers who are looking at paying people more than they might otherwise in order to maximize their forgiveness? I would think at some point, if you're paying people like dramatically more than they used to earn in order to get loan forgiveness, it starts to look a little suspect.
I think that's right. And I think they also have to think about, what the payment is for, right? I mean, I've got some clients, in retail looking to sort of like prepay, commissions for some time in the future. And again, I mean, it has to match up to that, to that 8-week period. So I agree with you. I think this could be scrutinized.
Great. Thank you. A question for Neil here about property owners, landlords. Are they receiving any federal relief in any form, either in something that's happened already or in proposed legislation?
So not specifically and directly towards them. Obviously, landlords could be eligible for the Main Street Lending Program, for example, or when EIDL was open, they could have applied for an EIDL loan, but there's not a particular program designed to benefit landlords at the moment, no.
Excellent, thank you. This might be more of a strategy question. I'm going to ask Marilyn, once a small business's PPP funding has run out, how can we continue to keep staff employed? And I'm not sure if by employed they mean productive or paid. So maybe you could look at both parts of that.
Absolutely, absolutely. And I think that it's just as when we were coming out of the recession and we didn't have a payroll protection that was helping us, small business owners had to have a plan. How many of these employees do I really need? They may have taken a strategy to maximize the payroll protection forgiveness, so they don't have to worry about that as a loan. But how many employees do I need? What talent do I need? Where is my company going? And let's find a way to get through this. Coming out of the recession, there were many employees who were willing to take concessions on pay to stay employed because they wanted to go forward. With the high unemployment rates we have right now and the dramatic shifts going on in our economy, we may have similar situations where if there's work for the employee to do and a benefit for their future, they may be willing to work with you to help keep them employed once you have run out of the payroll protection money.
Great, thank you. And I think, Manny, you had one last comment on this topic.
I do, because this is something I've been talking to a lot of our clients about, small business owners, is also when you think about using this money, try to use it as strategically as possible. We've been given a great gift here. So what you want to do is really take this time to use your employees to help diversify your revenue streams. So take a look at where you're generating revenue and can you generate new revenue streams, because this money is only there for a small period of time. You should use this to catapult you so that after that money runs out, you can continue to make money. And by the way, this isn't the first time we're going to have an economic disaster. This won't be the last time. So you need to prepare yourself and recession-proof your business now so that the next time something happens, your business doesn't get shocked. So use this as a great opportunity to keep your employees employed and creating new revenue.
Great, thank you very much, Manny. We have time for one last question, which I'm going to ask Susan to answer for us. It's something we get a lot about multi-member LLCs, right? So if I am part of a multi-member LLC, how do I reflect my salary? This person says, I usually pay myself via check as a guaranteed draw, but I'm worried the payment won't be forgiven if I don't put myself on payroll.
Yeah. So again, I think you need to be worried about, a draw for what? I mean, a draw for what period? And if that is going to be deemed, outside of that loan forgiveness period, there's definitely a chance that it's not eligible for forgiveness.
If they're paying themselves by draw regularly, sort of on a payroll-like schedule, is that going to still be a problem?
Well, I think they have to look at the program or their plan. So, to the extent that it applies to, that next month, then the traditional period during which it's normally used, will be used during this period as well.
Excellent. All right. Thank you very much. That was our last question. We're out of time, and I want to offer a big thank you to Neil Bradley and the team at the U.S. Chamber of Commerce. A big thank you to all of my colleagues at Inc. who have worked to make these town halls possible, and of course our panelists. Today we were joined by Bridget Weston, the acting CEO of the SCORE Association, Marilyn Landis, the president and CEO of Basic Business Concepts, Manny Cosme, the president and CEO of CFO Services Group, and Susan Gross-Sholinsky, a member of the law firm Epstein, Becker, Green. We will be continuing to follow these issues closely at Inc.com, so please check back there frequently for more updates and coverage. As always, it's a pleasure for all of us to do anything we can to support small businesses. Thank you so much for spending an hour with us. I hope it was helpful and productive for you. We all wish you a safe and healthy weekend and week ahead. Thank you.